Hello, welcome to lesson 2D of the short-term trading module, and this is the fourth part of the weekly range profile concept. And today we're going to discuss consolidation midweek decline and consolidation midweek rally. And you can see here essentially or conceptually what it looks like, where oftentimes Monday will start a rally, and then Tuesday going into Wednesday. Now, it's not necessarily Tuesday, but oftentimes you're going to see consolidation Tuesday, and then going into Wednesday New York session / early Thursday, the market runs into a H4 discount. Okay, so it could be a far discount, lower time frame discount, and continues to then rally, and then go into Friday, you get your jitter swing. Now, sometimes you might not necessarily get that jitter swing on Friday, but go into Friday, you have some sort of expansion, and sometimes it could be some sort of reversal, but it's not going to be a major reversal. Now, I mentioned during the start of the weekly range profile concept that you want your intra-week delivery to originate from an higher time frame level, higher time frame premium, or higher time frame discount, because our intra-week delivery is all based off of how price is delivered from the key higher time frame levels. But with the consolidation midweek buy or consolidation midweek sell, a lot of times the higher time frame delivery would already have started from the previous week, Thursday going to Friday. Now, the difference between this and the classic, all the other examples I've used in which all the setup forms or originates from higher time frame profile, is that with this type of profile, now sometimes the retracement, a lot of times the retracement on during the midweek, which is Tuesday, Wednesday going to Thursday, will occur around higher time frame level. Okay, higher time frame premium or discount rate, it will occur there and then see continuation. But now sometimes it could form around a 4-hour time frame or 1-hour time frame premium or discount. So for consolidation midweek buy, it could form around, if it does not form around a daily discount, it could form around a 4-hour discount or a 1-hour discount. Now, the key thing to note here, this is the kind of profile you can expect if in the previous week we made a short-term high or a long-term high in direction of order flow. So I want you to really grasp the concept. Now, if during the previous week, Thursday going into Friday, or Friday, Thursday or Friday, if we made a short-term or a long-term high at a key higher time frame level, I want you to listen closely. The market will start a new delivery cycle on the higher time frame basis. So if we're looking at the consolidation midweek decline, usually the previous week, Thursday going to Friday, the market would have made a short-term, intermediate term, or long-term high. Okay, it could originate from a weekly premium or a daily premium, and the anticipation is a new delivery stage comes to the marketplace. A new higher time frame delivery stage should form. Okay, so meaning obviously if we're making a long-term high or a short-term high, then the previous delivery state was bullish because it required bullish delivery of price to get up into that higher time frame premium, which could be an old high or some level or some kind of high time frame premium, right, where we're anticipating bearishness coming to the marketplace. And then Thursday or Friday starts the new delivery cycle lower. Now, the reason why Monday will continue that run lower, and this is the only time I trade Monday. Okay, the only time I trade Monday is if Thursday or Friday made a long-term high or low in direction of order flow or in direction of the new order flow I'm anticipating. That's when I'll trade Monday, because a lot of times, because there was not enough time to deliver or to continue the delivery on Friday, okay, Monday will see a continuation of the delivery going into Tuesday. And then the market will pause a little bit. Tuesday going to Wednesday. Sometimes it could go as far as early Thursday, which is London session, and then continue the delivery going to Friday. Now, if that consolidation comes on Wednesday and Wednesday sees a high form in the consolidation with the decline, then Thursday will continue the expansion, and Friday will continue the expansion partially, sometimes fully. But Friday, again, this is not something you want to trade your classic TGIF type profile. All right, so we have a very perfect example here. This is a pair we actually called and traded, and we're looking for this rejection block down here as our downside objective for that week. So you can go and watch the commentaries. So we'll document it there. We participate in all of this, and what you can see is this is the start of the new week here. So this is the Monday candle, Tuesday candle. What is this candle? Let me actually make this black. All right, Thursday's candle, Friday's candle. Now what you see here is the previous week we made a long-term high, which we actually called when price ran above the highs from here. So we have buy sell liquidity resting up here. Let me just draw it there, and the buy sell liquidity from this side here resting up there. And what you can see is as euro dollar was running higher above this long-term high, dollar was failing to run lower. Dollar was making a higher low. So you can see here euro dollar is making higher highs in price, but dollar is making higher lows in price. That is divergence. Okay, now it's not only divergence we just used to call a top in the marketplace. We use a couple other factors like COT. So I want you to go and watch the analysis I did on Monday. So go and watch exactly Monday, 8th of May. Watch the evening commentary and watch the full-on breakdown using the higher time frame concept I taught you guys. And now we anticipated a sell-off on euro dollar. Okay, so again, this is not one of those lessons where I have to go in detail into how we anticipated the highs, because it's not the purpose of the lesson. But when we have conditions like this where the market is making a long-term high in this example, now it could make a short-term low like this. If it makes a short-term low like this and Thursday go into Friday, then I expect Monday to be continuation, just like I can see here. All right, it makes a short-term low into a daily bullish shadow block, and then Monday is expansion, Tuesday is expansion, Wednesday is where you have your midweek decline, and Thursday is where you have your Thursday actually, not Friday. So you have your continuation route. So let me use two different examples, okay? So I'm going to use this actually, and then I'll come back to 8th of May's price action example. So here we can use both bullish and bearish for both examples. Now here you can see on Friday we had a run down into this bullish order block on Friday. Okay, so we've seen a run down into our bullish order block on Friday. Now on Monday, because we saw a run down into our bullish order block on Friday, Monday makes a short-term low in direction of order flow. Right? Because Monday is making a short-term low direction of order flow, we're anticipating Monday to be a continuation higher. Now, this 3 up candles, that's your break block, because we ran a low here, actually a daily low. All the run below that daily low originates from here, so that's our break block. And then on Friday the market starts to expand. Now from the example I painted before going on the charts, I talked about how there was not enough time the previous week's Friday to see a continuation of the delivery. So what would happen on Monday is Monday will start to see the delivery cycle continue, the new delivery cycle continue. So you can see in Thursday, Friday was a retracement, which is bearish delivery cycle. Now our higher time frame order flow is bullish, and our objective is wanting to see the market get up above the short-term high here. All right, that is the objective. Again, you can go and watch this week's commentary where we call this out. And what you can see here is Monday starts delivery cycle, because the previous week's Friday is where we made a short-term low, a daily short-term low. Again, it's not a lower time frame short-term low. We're talking about higher time frame level. So because we're making a higher time frame low, we're anticipating delivery from that low, and that's why Monday we usually start delivery cycle. And that we can see here is Monday start delivery cycle, Tuesday continues delivery cycle, and then on Wednesday you see a decline. And we actually call this buy on Wednesday. All right, on Wednesday you see a decline. Now you can see left shoulder, head, right shoulder. You can see the market runs below the neckline, and that offers a kind of buy. But on on Thursday, can you see any daily discount that the market was expanded from? Yes, this bullshit block here, that's a daily discount. So if you go back out to to a lower time frame, you can see after the expansion Tuesday, Wednesday saw a consolidation, right? Sideways movement where it was neither trading higher nor trading lower. It was staying flat or it was staying sideways. And all of this was going on inside these two up candles prior to run lower, which is a mitigation block. And you can see consolidation. So this is your classic, this is sort of the week here. So let me just draw attention to that. And this is your classic consolidation midweek buy, whereby price made a short-term low the previous week, Thursday or Friday. In this example, it was the previous week's Friday. I'm sorry, I'm talking so fast. Price made a short-term low the previous week, Friday, and then starts the expansion cycle on Monday. And in between Tuesday going to Thursday, there will be some kind of decline. So if Tuesday sees a continuation higher, then Wednesday will see some form of consolidation or decline, probably, and then the delivery cycle continues going to Thursday. Now, if Tuesday sees the consolidation, then Wednesday will continue the expansion cycle and going into Thursday. Okay, that's the key takeaway here. And it's expanding obviously for that buy liquidity up there. Again, you can see it does not get up into that old high, but it does get up into the rejection block here, right? And then on Thursday gets up into the rejection block, and on Friday it retraces back down to consolidate for the week. Now, this Friday's TGIF is expected because we've seen we've seen rally on Monday, rally on Tuesday, consolidation on Wednesday, rally on Thursday. All right, so this can be expected. But if we see consolidation on Tuesday and Wednesday, and then Thursday starts the new expansion cycle, a lot of time can continue into Friday, because there was not a lot of time to deliver bullish order flow, because we're bullish here. There's not a lot of time to deliver bullish order flow if we're consolidating 2 out of the potential 3 trading days. 2 out of the potential 5 trading days of the week. Now, this is one example of a consolidation midweek buy. And usually what happens is once we trade above the opening price for the week, you start to see a rapid expansion in price. So opening price for the week is this candle here. Oh, is this March? This is March. Okay, so that's the candle there. And you can see once we trade above that here, that's where the market really goes lethargic, and that's classic price action. Just like using again that daily candle concept I taught you, whereby the algo will start the profit release phase once it gets above the opening price after the accumulation below the opening price. That's the same concept on the weekly range profile. All right, the algo will start the expansion cycle once it gets above the opening price of the week after the initial Judas. All right, so let's go to the other example for cells we were using initially. So that was, I think that was 28th of May. Now here, unlike this example here, where it was just simply a short-term low in direction of existing order flow, this is a short-term high creating a new order flow. Okay, because existing order flow was bullish. Here, existing order flow was bullish. Here, existing order flow was bullish, but then we had a reversal late Thursday, going to Friday the previous week. Okay, so let me show you real quick. Here you can see Thursday we had a run above that short-term high, which saw displacement, and then Friday we continued to run lower. Now on Monday we start the delivery cycle lower. Monday actually starts delivery cycle lower, and then Tuesday continues delivery cycle lower, and then on Wednesday we have our consolidation, where it looks like the market is running above, or the market wants to run higher. I think we actually saw a short into this. So yeah, I actually shorted this run higher. Okay, and all the market was doing was the market was just retracing back up into this breaker block. So we have a short term high here. Market runs above that. Now, does it retrace up on Wednesday into a premium, daily premium? Yes, it does. Last up candle prior to run lower. That's a bearish order block. And That is our high time frame premium array. And on the lower time frame, you can see on Wednesday, this run higher on Wednesday around 1:30. That would have been a major economic release. So some kind of interest rate announcement was what caused this run higher, and that would have sucked in. I think we actually watched this live, and that would have sucked in, and we traded the continuation run lower. So go and watch the commentary day for this price action, and you'll see me navigate this live, and you can use that as an experience tool in building a weekly profile like this. And you can see on Wednesday we run higher, and on Thursday we continue to run lower. So this would have been a Monday decline, midweek consolidation going into Thursday decline, and on Friday you can see we continue to decline, because on Tuesday it was not really a massive decline because Wednesday rebalanced all of the decline on Tuesday. So we only really had downside on Monday and Thursday and then Friday. Alright, so, and the reason why we saw a rapid expansion on Friday was because we're expanding for that higher time frame target, where obviously there's going to be fund level liquidity sell stops for SNN, which is still here, and you can see that continuation run lower. So just going to be supplementary lessons to all of the concepts being discussed, but again, it's a lot of work to prep and do all of the videos, so that's going to be for a later time once all the course content is actually done. I'll see you on the next lesson. Trade safe.